Happy Friday night, traders. Here we are, together, toasting to a successful week for the green team. Now today, unfortunately, I ended the week red. But we'll get into the results in a little bit. Ended the week pretty good on the green side. And you guys all displaying an amazing amount of discipline, focus, and confidence in the face of adversity. And that's what trading's all about, right? We want to be confident in the face of adversity. Confident in ourselves. Confident in ourselves. Let's wait for a few more to trickle in here, and then we're going to dive deep into some trading wisdom on the week. But glad to be with you guys this Friday night. Cheers. This Friday, today was a little lackluster in the action, but there were a few good setups. This week entirely, the last couple weeks, I've been documenting some charts that I want to show you guys. Bada bing, bada boom. So if you missed the front side of the move, if you missed the move entirely, obviously you can wait for sloppy seconds, as I call them. Essentially, a ticker that starts downtrending into a descending triangle after the initial move. So there's a few tickers. This one I call DT for descending triangle. A lot of these, actually. We saw a few today, even. Some of these plays that have been down-ticking after their initial spike. So what happens is you see a ticker that makes a euphoric parabolic move, and rather than jumping into the FOMO side of things, we take the opposite side of the trade, right? But you want your edge to present itself. That's what we focus on. We focus on the edge, take the signals. But what I'm going to go over here in a second is why the edge is not all that matters. A lot of traders focus entirely on the edge, on technicals. But as you're going to find out tonight, the technicals are not of the most significance. See, a lot of traders place an insubordinate amount of significance on that when they should be focused more on what's going on up top. If the elevator doesn't go all the way up, yeah, it's going to show on the trading. Speaking of elevators, you guys know I like the elevator down, not the stairs up, and we saw that on a few tickers today. But most importantly, consistency starts in the mind. A few of us traders have been talking about that recently, about how the longer you trade, your ego actually gets kind of worse because you've seen these tickers move and you've seen what works most of the time, and so you do place an insubordinate amount of significance on those moves to happen because you've seen them work so many times, and that's the wrong way of looking at it. Unfortunately, your ego gets bigger, and maybe your bias grows bigger with it. Of course, we want to eliminate the bias entirely from our trading system. We want to trade in probabilities, which is over a series of trades, not focusing on an individual trade by trade basis. Not a sexy popular conversation, but a profitable one nonetheless. So ultimately, we want to create a state of mind that's unaffected by the market's behavior, and then the struggle will cease to exist. So today, I messed up with that a little bit because I placed an insubordinate amount of risk on MBOT. I really liked this trade and took a bigger L than I should have on an MBOT. Here's pretty much the P&L from today, plus a lot of locate fees. So I'm down probably $40-some on the day after being up about that at the start of the day, but stuck around and I gave a lot of it back. Some days it works well, and then other days it doesn't. I accepted that inherent risk, though, and have understood that I need to be pushing the accelerator a little bit. So MBOT, I put a little bit of put too much risk on that one. That one didn't work out today. Pretty much the majority of my L today was MBOT. I like this one a lot. Way off the trend. Left of the chart here on MBOT was way up at resistance, but the entire healthcare sector was getting a irrational climb today. And sometimes that happens where we see irrationality, and stocks can be irrational longer than we can be solvent. So we got to be mindful of that. And really, like I just said here just a little bit ago, we can't place an insubordinate amount of bias on anything. You take your setup and you move on. They're not all going to work. I'm telling you guys, I've seen so many traders do that. They've defined their entire trading career on one trade. And that is probably the 90% of people. I've seen it a lot. So I'm telling you guys, if you want to hear the blueprint, essentially, I can lay out the blueprint for you entirely. I promise you I can. But it's up to you to build the house correctly. And that specifically is an uphill battle for a lot of people. We all have uphill battles that we have to face, but we don't want to have downhill habits that negatively affect our entire performance. So I've mentioned many times that my uphill battle is taking profits too soon, and I did that today even. On CDT. CDT was a good one. I had a great average on CDT. CDT, my average here, CDT was 127. It's at 92 cents right now. And took all of it. I took all of it. I'm embarrassed to even say. 117, 118. Wow. Unbelievable. That messed me up. This was a good winner. Had it near the top. And if you guys were a part of the live stream this morning, you know the problem was that your initial entry in is your initial entry out with CPRO. It doesn't calculate necessarily the average, and so that kind of messed me up. I was taking baby profits on it, and I kind of wanted more, and didn't get it. So that resulted in taking baby profits on CDT. So that's been pretty much my issue. My main issue with trading has been taking the profits off too soon and sticking around too long on the L's. The ones that aren't working out necessarily, like the MBOT today, sticking around a little too long. Fighting them. Digging yourself deep in a hole when you should dig yourself out of the hole. And throw the shovel entirely away. Throw the shovel away. Because it's easy to go on tilt in trading. Very easy. That's why I applied a max loss on the account, because I recognized that when the emotions are heightened, you make irrational decisions, and that's not what you want to do. You want to trade with discipline, focus, confidence, trusting your system, trusting yourself. Main thing, that's the most important, being able to trust yourself to make decisions that are in your best interest for your trading account. If you can't trust yourself, how are you going to trust yourself to make the best decisions for your account? You're not going to. And so then you're going to make very bad decisions. You're going to jump the gun, you're going to adjust your risk parameters mid-trade. You're going to experience all the fears. Fear of missing out, fear of losing money. You're going to experience all of it if you cannot trust yourself. So put the guardrails up on the account so that you can make sure that you can trust yourself with your trading. All right, what else do we want to get into? Yeah, having frustrations. Having frustrations with trading. So you got to detach yourself from the outcome. That's a tough one. That is a very hard one to grasp. Detaching yourself from the outcome entirely. It's unlike most careers. So you can't do that necessarily if you're a doctor, can you? It's like, man, I need my patient to be healthy. I can't do that. With trading, you have to detach yourself from the outcome entirely and have zero expectations. Once you get to a place where you have no expectations, the struggle will cease to exist. You take the edge, but you know necessarily it doesn't have to work. It's the triangle of distributions. Beautiful. Beautiful. The triangle of distributions. Upside down triangle of distributions, by the way. So the largest portion of it suggests this is the likely scenario. The next part, 80, that's probably roughly like 80%. And then the next part is maybe 15%. This is less likely to happen, but can happen. And then 5% down at the bottom, this is highly unlikely to happen, but still could happen. That's the upside down triangle of distribution. So anything can happen once you truly accept and embrace the risk. That's why every morning I've been starting the day just with a little reminder to myself that, Kevin, don't marry a ticker, even though I was on the brink of it today with a ticker that I nearly top tick in BOT. We won't get into it. Don't marry a ticker. They're not loyal. They're not loyal. You got to remember that. Mr. Bad in the building, in the live chat. Hey, good evening. Good to see you in here. The end of the day green, Bad. I was going over it. I ended today red, but the week is green. I'm happy with the week. We'll start next week on a green note, and gonna really focus on taking the setups. I mean, I'm okay that today ended up red because I was still pushing the gas. That's what I've been trying to do here. And I did that the entirety of the last week. Made 100, lost 40, made 150, lost 20. Had a few red days, but they were small, and had some really good green days. So I'm okay with pushing the gas, and I understand that some days it's going to turn out red. But when, like, there was one day, like, everything I was touching was green. And you get into that zone. As Douglas said, trading in the zone. When you're in that zone and you're just in the flow, when you're in the flow, it almost feels more difficult to pick up money off the ground than it does to take money from the market. All right. One thing I want to point out to you guys is you should not operate under the assumption that more analysis, more indicators, more bourbon is going to create more consistency. It absolutely does not create more consistency. Really what it creates is a stronger bias. This is not a paid product placement, by the way. It creates a stronger bias, and that's what you want to avoid. Because if you... Look, I'm telling you guys exactly my struggles, because I think it's entirely relatable to the traders that are starting out. My struggles for years, I think I can help jumpstart your trading career. I mean, that's my whole goal. That's the book. That's the title of it. That's the journey. That's everything. Everything I preach to you guys is essentially I'm trying to help get you over that initial hump. in that initial hump, for me, when I first started out, I was creating bias. I look at the news that I call now fundamentals, but you do 3 types of analysis: fundamentals, technical analysis, fundamental analysis, technical analysis, and trader analysis. I hardly do any analysis these days, though. I mean, the main analysis I do is on the chart. It's going to be trader analysis. I'm a contrarian trader against human nature, human behavior. So don't operate under that assumption that more indicators and yada 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 is going to create a stronger bias. And then if the trade doesn't work out, you're going to feel betrayed, or perhaps you're missing a tool or an indicator that can propel you forward. You're trying to eliminate risk entirely. And ultimately, that's to your detriment, because you're never going to eliminate risk entirely. You're not going to trust the market. You're going to think the market betrayed you, when in reality, you're just not able to trust yourself. Not able to trust yourself. And that's why it's going to be hard for me to ever have 1,000 people in here, because I preach the truth, and the truth is not popular. It's not popular. It's profitable, but it's not popular. People want to be told to buy the low float ticker that's up 500% on the day. But I got to be a man of integrity. I have to be honest with myself and you guys. So, have no expectations for each individual trade. Accept the wins and losses, move on. Thinking in a series of trades, the probabilities, not on an individual trade-by-trade basis. So, bad, you ended a little red today as well. Yeah. Ended red here on this Friday too, but green on the week. Hope you're green on the week, bad. Monday, we're going to get it. You need to slow down maybe on Fridays. That's how I felt too. I kept trying to push the pedal, and it wasn't the right day for it. So, it makes your weekend seem long too. I know. It's awful. It's awful. Because you almost feel like you're identifying with your last day of trading. So, you feel like a loser. But that's not the case. I mean, you try to look at it again on a series of trades. So this week, I'm green. I'm happy with that. Up a couple $100 on the week with the small account, 15% or so on the small account. So I'm trying to look at it like that. I'm going to keep up from here. Mr. Keith in the building. What's going on, Keith? Spending your Friday night with the green team. Good to see it. You been sick? Still watching and learning. Sorry to hear that. It's probably because you're driving all around at all the different Costco's and Walmarts and Food Lines and Piggly Wigglies and getting everybody's illnesses, but you'll get better. Drink some bourbon. I hear it gets rid of the bacteria. Okay. So you guys have heard it enough. I've been talking about thinking in probabilities, right? Not thinking in certainties. Not thinking in guarantees. And again, guys, like, how am I... just try to think about this from somebody who's been trading for a while. That think about all the gurus that are trying to grow their chat rooms. Are they really going to grow a chat room telling you guys what I'm telling you? I'm doing all this for free for you. And this is worth some money. Let's put it that way. This content's worth some money. They're not going to tell you what I'm telling you. They're not going to get anybody to sign up for their chat rooms. I'm telling you guys the truth. Don't think in guarantees. Think in probabilities. Don't think on a trade-by-trade basis. Think over a series of trades. dude, seriously, with what I'm telling you guys, how would I ever grow a massive chat room? But I'm being honest with you. It is what it is. Man of integrity. That's what I'm trying to go for. All right, there's a few things I want to point out for the newer guys that are starting trading. I know Keith is thinking about he's going to get his account up and going soon. So I want to speak to you directly, Keith, over a few things. All right, these are like fundamental rules that I've developed over the years of trading that I think are going to be very applicable to your account once you get started. So what do you... Those dirty shopping carts in your hands and your mouth somehow. Yeah. That's funny. Knock on wood. You're done with it. Dude, it was awful. I literally, in like a month ago, I said, man, we hadn't been sick all winter. This is great. The next day, had COVID. Right after that, had the norovirus. And then right after that, had RSV. So, I'm going to keep those comments to myself from now on. All right, fundamental rules developed over the years. So, number one, your entries need to be quantified signals with an edge. So, when I first went offshore, I started with TOS on a cash account and grew that account from 1,500 to over 5,000. Went offshore and went kaboom, blew it up. The problem, the reason I blew that up quickly, I was like, dang, dude, I grew that account and then completely blew it up is because, well, one, I was over trading. Now, I try to tell traders that are going over offshore outside the PDT, I pretty much assume that you have an edge, but I maybe I shouldn't. You got to trade the signal. You gotta know what your signal is. What's your signal? So let me break it down for you real quick. I'm going to show you some signals I saw this week. All right? So I'm going to show you guys some signals. And you can trade multiple edges. You don't have to stick to one. That's the thing. And it's very... I'm trying to think of the right word. Analytical? I'm not getting the word. But there's an analogy here I'm trying to think of. But it's relatable. There's the word. God, Kevin. Cheers. It's relatable to poker. Very relatable to poker. Hey, for those that are in here, I'm going to keep going right now. Can you tell me what the delay on the stream is? Because I tried to work on it. I think we're down to like a couple seconds for when we're live. Can you look at my cursor, top left corner? Right now it's reading military time, but 9:20:35. Can you guys tell me what the delay is on it? Because it's been 20 seconds, and I'm trying to get the... for when we go live in the mornings, I'm trying to get that down to just a few seconds. So if you guys can look at that for a second and tell me what you think. All right, so number one, you want to have an edge, but you can have multiple edges. It's like the poker table. I mean, you're going to put chips on the table if you got pocket pair aces, right? You're going to put chips on the table if you got pocket really anything. If you got pocket tens, pocket jacks, but they're different hands, they're different scenarios. You're trading over time. You're going to develop probably multiple edges. So people say, just have an edge, just trade your signal. You can have multiple edges, guys. It's not strictly one, okay? That's one thing I want to point out. Right now, I'm laying out the blueprint for the newer traders heading over to the offshore broker. I blew up when I went offshore, so I'm trying to make sure you guys do not blow up. I want you to learn from my mistakes. That's why I'm here to help you guys out. So I blew up because I was over trading really bad hands. Over trading really bad hands. And not only that, I remember specifically some tickers that I went all in on. And I've gone over that plenty of times. You never want to think on a single trade-by-trade basis. You want to think over a series of trades. So never go all in on one ticker. All right, so this is an edge right here I look at. Descending triangle. Lower highs getting squeezed tighter to support. You crack and fade. That's an edge I'll look for. So I'll essentially, right here's where if I miss the hit on resistance, follow my cursor. I like to short it on a pop on sloppy seconds is what I call it. Sloppy seconds. And then the risk is going to be over high a day. And the reward is going to be a lot greater than that, obviously, looking at this chart. But that's something else you want to consider. So have a signal. Know your stop before you take your entry. God, please, 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 guys. Amateur traders, they focus on spinning the wheel. Professional traders, they focus on the risk. Before you ever enter the trade, there's two things you want to look at. Again, not sexy conversation, but this ain't red panty night in here. I'm trying to teach you guys how to be profitable. Number one, you want to know your risk. Number two, you want to know that it's a favorable risk-reward scenario. Okay? So it's not just about the signal and the risk. You got to have a favorable risk-reward outcome, right? Let's say the risk is 10 cents and the reward is 10 cents. Do you really want to take that? I mean, maybe it's a pocket deuce hand. Do you really want to take that, though? I mean, maybe. But if you do, size down, right? So there's a few different variables to it. If you're going to take that hand, probably size down because the risk-reward is not too favorable for you. So if you get this on sloppy seconds as a trade from the prior week, obviously we have a lot of room to move down because the previous close is a number I'm always looking at as a natural area of support is $22, and we're gapping up over 5 points. So we have a couple points there, at least to fade. Obviously, we'd have to look left of the chart, but there's an edge there. And those two criterias, I mean, there may be more than that, but those two specifically are the ones I'm trying to point out to you guys. You want to focus, again, this is 6 or 7 years ago. I went offshore. I grew an account up 1,500 to 5,000, blew it up probably within a month, over trading because I wasn't focused on A, good signals, and B, I wasn't focused on favorable risk-reward outcomes. So those two you really want to focus on. Bad, you had a total green week this week. Awesome. Very happy to hear that. Focus on that. Series of trades versus a trade-by-trade basis. Keith, 5-second delay, that would be great. That's a good improvement there. Mr. Bob in the building. Yo, how do you do this morning, Bob? Good to see you in here as well. All right, so hanging out with the boys. Guys, look, I have an addiction. Are we the degenerates are really in here this Friday night, right? We're the degenerates. Other people are out partying. We're focusing on trading. So there's nothing else I'd rather do. I don't care anything about partying. I'm an old dad at this point, about to turn 31, got 2 kids. I mean, this is my party. This is my kind of party right here. I would have no interest in having any other party. All right. So those two things you want to focus on with your account. Another thing you want to focus on is, and I've said this before many times, if anybody's watching this retrospectively after the fact, what I'll say is this to you guys that are watching it maybe tomorrow, those that are out partying right now and watching a little bit later. You never make it, you're always making it. That's what I always say that. You never make it, you're always making it. The emotions don't really go away. You just kind of learn what they're telling you. So, like today, there were a few tickers. Man, the one I missed effed me up. The one I missed really messed me up, guys. I'll show you that. Would have been a really good day had I actually hit this one. Which one was it? FX? Hang on. RX. That's what it is. Okay. RX. So this one, like, my emotions were scared on this because it went from 4 up to 6, and that was resistance. That was so good resistance. Oh my god. Hindsight trading is awful, guys. Hindsight trading is awful. See, it messes with the emotions. So $6, very good resistance. It was a ceiling of resistance here, and I loved it, but I wanted more on it. I wanted 620 before I was going to hit it on the short. It just hit 6. And this one, in hindsight, I so wish I would have taken it. 6, sold off to like 530. Keith and Bob, 4140. Hey, so we're hitting the target audience in here then, right? On a Friday night. You guys are kicking back. Y'all are probably just kicking back in your recliners right now. Chilling. I love it. Simple things in life excite you these days. I'm getting there. I'm getting close to you guys. Yeah, you gotta see things objectively. You gotta see things objectively with trading. That's the problem here. That's the problem. The emotions. So, again, what I was saying was the emotions, they were telling me that, oh, Bob, a veteran, by the way, God bless America, absolutely. Man, I am honored that you are in the chat. That is incredible. Thank you, Bob. I appreciate you and your service, and let's get it. You heard of Eagle Rare? Speaking of America, you heard of Eagle Rare? That's what we're working with right now. So we got to focus objectively on the market, which is hard to do if you're not trained with an algo, right? If you're not trained with an algo, this can be difficult to do. All right, so RX messed me up. What I was saying was, even with years of experience, when I was saying you never make it, you're always making it, RX was I normally have at least one miss a day, which is annoying, right? I try not to, and this is just word to the wise right here. Word to the wise, try not to cry over spilled milk. Just be happy with, just try to be content, okay? Like, you listen to 90. I've watched a bunch of, I don't know, 90-year-olds talk about the secret to a happy life, and what do they usually say? Actually, man, I don't remember his name. One of them said this. Most of them say, just don't be envious. Don't fall into those. Don't fall into those just sins of envy and greed and lust and all that stuff. Just, try to learn to be content. So I try to focus on that, especially with trading, because every single day there's going to be something that you're not going to be happy about. Okay? Every single day, you're going to have something you're not happy about. I promise you guys. And I'm preaching to the choir here because every day I'm very frustrated with something. I try not to be, right? So just accept and embrace the fact that with trading, you're going to be upset with something every single day. All right, let's get that out of the way. Now, RXRX, I missed this entry. Yes, I'm pissed about it right now. So all that goes out the window. Yeah, I'm mad I didn't take this entry. So what I was saying was, you never make it, you're always making it. The emotions are always brewing, and they're there, and you experience them in a way, but you understand what they're telling you. I remember my first trade 10 years ago, and it was awful. It was so bad, so bad. Fear of missing out, buying something as it's going higher. Over the years, I've learned to be a contrarian trader. I much prefer that elevator down versus the stairs up. So buying something as it's going higher, not having any kind of risk in mind, all you're thinking about as an amateur, as I was, is profits. So I'm getting into it. This thing's up high. Let's go. I mean, it's only up 300%. Why not 400%? You buy high and you hope higher. You buy high, you hope higher. That's what amateurs do. They spin the wheel. They're focused profits, not risk. Those two things I just told you guys, focused risk and focus favorable risk-reward outcomes. So if something's barely up, I probably would not short it. We need tight risk, high reward. And traders focus entirely. A lot of the gurus out there especially focus entirely too much on high consistency. All right, I'm going to tell you guys a secret. So write this down, put it in your repertoire. Just make sure you guys remember this. I've been in all the chat rooms, so I know how they all operate. You guys, you're learning the best here, I promise you. You're learning the best here. I've seen it all, heard it all, know it all. So, not like some traders out there, they'll have a 90% win rate. Some traders out there, they'll have that very high percentage rate. But what I mean, it doesn't. The people they focus too much on that. It honestly, I think, is a marketing tactic to maybe try to get traders to sign up for a chat room, stuff like that. Because here's the reason it doesn't matter. Well, I've seen why it doesn't matter. Because these same traders that have a 90% win rate, the 10% of trades that don't work out because they hardly take a loss, they cannot accept a loss. And so that one loss turns into the trade that defines their entire trading account. I'm focused. I'm teaching you guys on a series of trades. Don't focus on an individual trade by trade basis. And a lot of these traders that focus on a high win rate, they may have a high win rate, but the one trade will wipe out the entire week, 2 weeks, or month, or year. I promise you guys, I've seen that many times. It doesn't have the significance that you would think that it has. People place an improper amount of significance on a high win rate. You can have, these are the numbers. So believe me, if you want to, look it up. I advise you to look it up. Don't believe me, look it up for yourself. You can have a 34% win rate, which implies what? A 66% losing rate. You can lose 66% of the time. You can win only 34% of the time. But if your win-loss ratio on a 34% win rate is 3-1, you're going to be green. Look it up. Look it up if you don't believe me. So what does that imply? What are the implications of that on your trading account? It means you should not focus on individual trades. I'm telling you guys, don't focus on individual trades. And I have the problem with that just like everybody else. So that's why if you watch my C Pro tutorial, I even demonstrated it. I'm like, look, I traded 8 times today. I was green on 6, red on 2. I want you guys to learn to focus on the series of trades, focus on taking many signals. I see that problem with a lot of newer traders that they'll focus on a low float ticker and they'll focus. Well, first of all, they'll focus on the wrong trade. They'll focus too tunnel visioned in on the worst trade that they could possibly take. On a low float ticker, they'll be what was that today? PRTG, which ultimately on front side was like entirely, you learn the wrong lessons. I've talked about process-oriented versus results-oriented trading. So results-oriented trading says, oh, green trade, good trade. Green trade, good trade. Red trade, bad trade. No, that's not it. That's not it. Red trade could be a good trade, and green trade could be a bad trade. Look, I'm trying to speak. I'm trying to speak in layman terms here, all right? Green trade, bad trade, red trade, good trade. Let's start from here. Can you have, by a show of hands, you guys raise your hands. By a show of hands, can you have a green trade that is a bad trade? I want to see hands in the air. The answer is yes. You can have a winning trade that is a bad trade. The answer is yes. And in the market, because the market will humble you, traders can learn the wrong lessons off of those. For instance, one thing that I can think of recently in the market was the initial IPOs. The IPOs that were coming out, there was one that went from like, God, I don't even remember which one it was. There were so many IPOs. Bob, all my bad trades are green. You know what's funny is because I'm a contrarian trader, most of the time, my trades do start red because I'm taking the opposite side of the trade. So as the trade is having the euphoric move up, I'm shorting into that, into that spike. So it's most of the time I am red usually initially on the trade before the elevator down. So there is some truth to that. That's too funny. All right, let me catch up on chat real quick. You guys keep posting. This is fun. We just got all of us old dads in here tonight. That's all right. The youngins will join us on Monday morning. Keith, going long, I lost over $10,000 last year because, what's front? It's just, I hate longs. I hate longs. Bob, you got to work on being wrong and letting it go. So one thing, Bob, that helps me with that, just letting it go, as the wise words from Elsa. One thing that helps me. Have you guys heard of Eagle Rare? She's a good one. Buffalo Trace Distillery was underwater this past week, by the way. One thing that helps me with that is focusing on multiple trades. So that's why typically, like when I get into something, I am looking at a different trade. I do set the OCO and stop on it. Stop and profit. So one cancels the other, Bob, is what OCO stands for. You probably already know that. One cancels the other. I set that, focus on a different trade. When I'm in, I've noticed for my own trading, when I'm in 2 or 3, I can look at my positions window and I see what's working and I see what's not working. And I become more like impartial to it. I'm not so tunneled in on one trade. This trade has to work. Let me fight it. I'm going to hold it and hope. I'm going to become a long-term investor in this ticker. So that's just something. I'm throwing that in there for free. Something I've noticed with my own trading right now. When I'm in multiple trades during the day, it helps create an impartiality with my trading, so I'm not so tunneled in on one. All right, let me catch up. Keith, probably doesn't help taking bong rips before you trade. Okay, yeah, guys, we have like bourbon night Friday night, hanging out with the fellas. But I don't think I would I don't think I would drink and trade. I mean, it would probably create an averseness to the risk that may be beneficial. I don't know. Yeah, I wouldn't trade in that state. I wouldn't do that. But that's funny. That's what I was thinking. Smoke after that. Thank you, Bob. Keith, I wasn't using stop orders, just hotkeys. Yep, just hotkeys. I'm surprised I have anybody listening to me right now because, look, none of this is sexy conversation. I promise you guys, none of the chat rooms talk about this stuff because it's not marketable. Who's going to join a chat room that's talking about, man, focus on risk, focus on the dispersion and probabilities, not the guarantees. Instead, they're focused on low float ticker, 500,000 in the float, buy it. We're going to the moon. Yeah, all right, so you gotta. Okay, what did we see with the SPY this week? This is all I'll say. Because I have said this multiple times. What I'll say is we're seeing a very increased amount of volatility in the market over the last, I don't know, honestly, month. But especially the last week with the tariffs and whatnot. We've seen the market just chop around with every single headline that comes out. Now, shorts got completely squeezed with the SPY based on that 90-day pause in the tariffs. You saw that the other day, right? And pretty much all the tickers out there, in mid to large cap range saw a spike thereafter. So what would have been a wise thing to do? It would have been to have a stop set. So like I said, I like to focus on the series, multiple trades at a time. If I was short on something there, I would certainly have wanted a stop. There's a reason I don't like to hold things overnight either, pre-market or after hours, because of the increased volatility with news and whatnot. You never know what's going to happen with news. That's when a lot of the headlines, PRs come out. But yes, I suggest what a lot of the gurus don't suggest, which is always have a hard stop in place. It's going to enforce a few things. So the hard stop, when the market does that, they come out with that headline, tariffs are pausing for 90 days, everything shoots up, you're going to get stopped out, probably at a good price and not get all that slippage. Or now you're not getting a good exit and you're trying to... you're going to be deer in headlights, essentially. And we've all been there, right? Can we just be honest? We've all been there. We bought something at the top, it elevators down, we go deer in headlights, paralysis by analysis, and then we become a long-term investor on a company we absolutely know nothing about. Everybody pretty much starts out day trading like that. Mr. Bob, can you use a stop order with hotkeys on C Pro? I manually do it. I'm not sure if you can use I don't think you can use a hotkey to create a stop order. Bad. What I learned was it is a good trade if you followed your system, even if it ended up stopping you out. Absolutely. So that's the process-oriented trading rather than the results-oriented. So process says if you stuck and adhered to your trading plan, it is a good trade, regardless if it's green or not. Regardless. You take the signal, you know this is a pocket pair ace hand, but you know additionally that even though the pocket pair ace is a good hand at the poker table, it's not going to win every single time. Will it win 90% of the time? Likely, but every time, no. And so, once you truly accept and embrace that inherent risk, it's going to have fundamental implications on your trading account. Absolutely, it will have implications on your trading account. Accept the risk; they're not all going to work out. And there's really a huge psychological gap between assuming that you are a risk taker because you trade. I think people, there's a surface level assumption that you're a risk taker because we trade, right? But then you have to fully accept the risk, the inherent risk in each trade. Once you fully accept that risk, it will have a profound implication on your bottom line performance. Keith, maybe if we can do that with C-Pro hotkeys, I'll take a look at that here in a little bit. That'd be great. But right now, been using the OCO orders. But you guys can click on the chart too to set your orders. I did a tutorial on that. Watch it if you haven't already. Bob down on BON. I'll take a look at that chart right now. BON and oh shoot, BON. Little penny place spiked up to 13 all the way down to 6. Deer and headlights. Yeah, so thank you for your honesty. I mean, that's exactly right. I mean, let's look at the chart here. Apologies. What is that today, Bob? On this move right here? Yeah, so I mean, again, this is the elevator down kind of stuff. This is it. You see a spike up, but this is applicable to many, many charts, not just this. Not just this. Applicable to many charts. You see a ticker move up 100%. It elevators down and unwinds and fades. Bought in at $1.74, so you bought in. This chart's hard to look at because it's probably done a bunch of forward splits. Or, yeah, forward splits. Yeah, on this move right here, back in March 17th or 14th, if that sounds correct. Yeah, you gotta let these go, Bob. You're not seeing the inherent risk when you're getting into them. Are you still in it? Yeah, you gotta. So in trading, man, it's the wild, wild west out here, Bob. It's the wild, wild west. A lot of times you gotta do the opposite of what your natural inclination is. That's what I've learned in trading. You think something's going up forever, it's probably a good idea to short it. Or, as Mr. Buffett said, be fearful when others are greedy and greedy when others are fearful. So, on BON right now would probably be a good time to buy it. I mean, I don't know anything about this play, but it's at all-time lows. But it's all about human behavior. It's all about human behavior, Bob. I mean, as long as I've been trading in the market, human behavior has never changed. What does that mean? It means that fear is a very strong emotion in trading. Traders experience, there's 4 fears in trading. Traders experience the fear of missing out is probably the most potent fear. And that's why I started long like everybody else does, but over the years you gravitate towards the short side, in my personal opinion. I'm not saying that's everybody. Because you see that fear has a potency like no other. And a lot of longs do get involved with that emotion and have no risk in place. And so when you short and we elevator down and fade, you're taking the long's money all the way down. All the way down. That's just what I've seen. That's what I'm telling you guys. Fear is a very potent emotion. amongst longs, and there's not a lot of risk inherent in some of their trades. They experience that fear of missing out. So the 4 fears in trading: fear of losing money, the fear of being wrong, the fear of missing out, and the fear of leaving profits on the table. So identify what yours is. We all have uphill battles, but we want to make sure that we don't have downhill habits that are going to reduce our ability to progress. Or at least you just need to recognize them, right? So that way, like, I think a lot of traders think that over the years you're just going to not have downhill habits anymore for your uphill battles, but that's not the case. We all do. Learn what they are and embrace them, accept them. So, I mean, I've talked to hundreds of people about what their issues are, and we can discuss them here. Mine has been taking profits off the table too early. I've always done it. And so for me, I take half off and let left and try and set a stop at break even. So I guarantee myself I'm green on this trade so I can calm that emotion down. Guarantee I'm green on that trade and let leftovers work. That's how I work with that emotion. I understand my downhill struggle. So let's say yours is the fear of missing out, FOMO. Thankfully, that is one that I have worked out of. I think most people do start with that. The fear of missing out, FOMO. You see something going up, you want to buy it, you don't want to miss out on a move. It's a bad one. If that is your struggle, the fear of missing out, I don't know. You got to put the guardrails on the account. So what do you do with the fear of missing out? I'm not struggling with that one, so that is actually giving me a little difficulty thinking about it. The fear of missing out, so that's gonna cause you to buy high and hope for higher. I mean, you're gonna have to sit on your hands. You cannot be buying upticks. You need to be focusing on buying fear, selling euphoria. I mean, do what the quote says. Buy when others are fearful, sell when others are greedy. Be fearful when others are greedy. Greedy when others are. Be greedy when others are fearful. Fearful when others are greedy. Yeah, there you go. All right, I'm going to catch up on chat. Healthier life. I do like C-Pro speed, execution speed. Yep, with the ECN, Electronic Communications Network, you have pretty much direct access. Bob, I bought at 174. Keith, way cheaper than DOS. Yep. Keith, I suck at reading level 2. Then don't read it. Join the no level 2 crew. Bob's just going to donate the last 50. I mean, thankfully with longing, you can't go under 50, right? Keith, thank God you had your massage table. Jump in with a stop loss. Yeah, so that's probably... Keith, if you shorted like Kevin when I thought it was going long, I would have a lot more green days. Do it. Press the other button. Let's go. We're the dark side crew in here. More of just seeing things objectively, shorting when something's overbought. I mean, what are we doing? We're looking for inefficiencies in the market, right? Tickers will gravitate towards their intrinsic value over time. So what we're looking for is inefficiencies, and that's what we see a lot of the time with some of the smaller cap stuff is a lot of inefficiencies. So there's a lot of traders that look, I don't know why anybody watches me. Everything I say is contrary to popular opinion. Like the level 2 and times of sale and stuff, you guys already know I don't look at it. I'm not suggesting you don't. Let me just tell you why I don't. It's all a reflection on the chart, irregardless. And plus, with DOS and a lot of these direct access software platforms, you can display any amount of size you want. You can spoof orders. I don't know if you guys have looked into that or heard it, but you can spoof orders on the bid or ask and spoof people. So it's all smoke and mirrors. I don't care for it. I really don't look at it. I mean, you'll see a huge bid and then it just will disappear. A huge ask, it'll disappear. I think what the main message I'm trying to get across to you guys is people focus way too much on the criteria and indicators and all the noise to try to eliminate risk. You're never like it just creates more bias when you're looking at so many different things. It creates bias. Thinking that you're going to eliminate the risk entirely. You're getting too tunneled. You're getting too tunneled in. I'm speaking for myself. You guys may not struggle with this. I'm not saying this is for that nobody should use these things. I'm just saying for myself, it works better for me not to focus on a ton, all the indicators, all the level 2 and times sales and all that, because then it's going to create additional bias for me rather than just trading the chart. Taking good signals, setting stops, and moving on versus sitting there and staring at the level 2 and times and sales and all that. But yeah. Welcome to the Everyday Trading Green Team, where we talk about unpopular things. Yeah, dark pools. The level seems misleading. Yeah, absolutely. So bad watching the prints now seems easier for me when shorting, seeing held offers and unusual offers at times of sale. So if I was using the times of sales like you're suggesting, I guess something I would look for is when the green is flashing a bunch. That's probably, and it's coming up to a level on the daily chart that I'm looking at. That would indicate to me a short. I'm taking the opposite side of the trade. The opposite side of the 90%ers, right? If the 90% are losing, I want to be part of the 10%. I want to be part of the 10% crew, taking the opposite side of the trade. So what happened with BON? Yeah, I'm sorry to hear that, Bob. You got crushed on BON. Lessons learned, though, with small accounts. So, lessons learned. Yeah, I mean, what was it, an offering or something? I mean, this thing dropped, it shot up and probably had, some kind of an offering. Why would for it to drop that much? Yeah, closing of a March 18th, closing of a $12 million offering, diluting its shareholders. It's tough out there, man. It's tough. Very tough. But yeah, guys, we've gone over in the last hour so much good content. I encourage you guys who are just now jumping in, go back and watch this live stream. I think it's going to help propel you forward in your trading journey, laying out the blueprint for your trading career. We each individually have to build the house. That's the tough part. Consistency starts up here in the mind. Consistency starts in the mind, not in anything else, not in technical analysis. It starts in the mind. Money's a byproduct of trading well. Trading well. Process-oriented trading. Your mind has to be stronger than your emotions. Your mind has to be stronger than your emotions. All right, let's look at I'll wrap it up here in a little bit. Let me know if you guys have any questions. Let's look at a few more charts. So this is the last couple weeks. Descending triangles, DT. Here's one as well. I like these on overbought euphoric moves, because the risk is very tight up against the high a day, and the stop is, the profits are much lower. Look how many descending triangles we have. And again, you can trade multiple edges. You don't have to stick to one edge. I'm not encouraging you to overtrade. What I'm saying is find these setups, and they're okay to trade. So we have a couple of descending triangles, lower high, squeeze tighter to support after a climb, whether that's the previous day or intraday. Here's MO. You see, and I love the upper shadows. Anytime we're popping up towards that upper resistance line, and then prior support now becomes resistance, and we fade off of that. Man, so many descending triangles. And then here's an example of a bear flag. Ticker that's overbought. If we miss the hangover setup that's in the description of my videos, make sure you check that out. If we miss that initial sell-off, then we can wait for it to pop up towards clear defined resistance for the snap of that bear flag. But on the daily, this is what I'm looking at. I'm looking at daily resistance all the time. Always look left of the chart to get an idea of daily resistance. Here's a good example this past week of a head and shoulders pattern. This was on Lemonade, LMND. We had our head up at towards 40, left and right shoulders around 39, neckline near that VWAP. Once we cracked, we faded off of that. Head and shoulders, very bearish. Pattern. KC, this one, another euphoric move into a descending triangle and crack. So again, you don't have to, and this is one that hit some daily resistance as well. So you don't have to just like short front side. You can wait for the pattern to develop. Magic 20-cent number getting hit. Here's a hangover setup from this past week. LX. Overbought move. It opens up week after hours in pre-market. The people that were long on this the prior day don't see their gap up. Momentum has shifted on something else, and we see the longs unwind their positions. Same thing with METC. So these patterns develop nearly every single day. I already have them on my watch list for Monday morning, so we're going to go over on Monday morning too. Some of these patterns to be looking for Monday. But traders, that is a excellent Friday night live stream. Thank you guys for tuning in. Keith, Bob, Bad, Healthier, and everybody else in here tonight. Any questions before we wrap it up? Let me know if there's any questions before we wrap it up. You guys have an excellent weekend. The green team's been green over the last week. A few of us had a red day today. It's okay. Focused on the series, not the trade-by-trade basis. Absolutely, Keith. Yep. You got it. You got it. Yeah, we're going to be back at it live Monday morning to attack this market. Bad, you got your drinking buddy on Friday night. Good, virtually, yeah. Hey, we're all friends here. We're all buddies. This is the party I'd rather be having than anything else, so I don't know what to do when I'm not trading or talking about trading. I really don't know what to do. I guess take care of my kids. Just involve myself in their interests. Bob, does the carpet match the drapes? Interesting question. I don't have any carpet. But if I did, it probably would. It probably would be a pump patch down there if I did. Oh, is this what our Friday night conversations are going to be about, guys? America. All right. Anything else before we wrap her up? Wrap her up in a nice little bow. Start the weekend. The dreadful weekend. Is the NASDAQ ever going to... We're going to get to that 24-hour trading, so we never leave our trading stations. Never leave our trading stations. Won't that be nice? The 24-hour NASDAQ. Oh, that's a that's a bull. That's a bull, but I don't know. I mean, these days it could identify as a bear. Who knows? Let's call it a bear. Do what I do best right now. Just flip through a few tickers. Since I got you guys, why don't we just look at a few tickers? Ari, how much do you put in each trade? What's your take profit? 20%. Yeah, I'm trading small account, so it's I'm looking for about 2 to 5% each trading day. Max risk is 5%, but yeah, 2% is about a good number. That's pretty much a rule of thumb. 2%. 2% like the milk. Yeah, MBOT I got a little tunneled in on today, guys. The whole healthcare sector was climbing up. Got an early entry here. That one I stopped out of and hurt. That put me red on the day. THTX, interesting. So we shorted this. I ended up break even on it with the leftovers. THTX, God. You know, the magic 20-cent number, this held up great, perfectly in the 220s. Came back down, popped back up here, 250s after hours. So we're seeing a move there on THTX. It had a news of a potential merger, I think. It was like a merger acquisition, something along those lines. A few different hangovers I'm looking at come Monday. BFRG hit the magic 220. Guys, no one else talks about it. 220. Magic 20-cent area, BFRG hit. 210's very tough resistance. I'm looking at this one for a hangover come Monday. As well as a few others. PRTG was the 500,000 inflow ticker today that just had a massive climb. We'll see what that one's going to do. On Mondays, when the dust settles, if there's no play that's really sustaining any kind of hype in Pennyland, people go back to the well in which they were drinking from, and PRTG may be just that. Man, Mbot depresses me. That one depresses me. But yeah, that's it. That's going to wrap it up, guys. That's debriefing you guys a little bit on a few tickers I'm watching come Monday morning. Bad. You're hoping FMTO wakes up on Monday. Oh, God. Are you still working that? Oh, my God. This thing's at 3 cents. Ugh. Yeah, they diluted so much. 230 or 40 million shares they threw into the float. That was awful. That was one of the worst. And I took a big L on this, by the way. FMTO. This thing, 8.14 down to 3 cents right now. I tried to scoop it. I had like a 9 cent average, but size it into a little bit. But wow. I mean, no bounce at all. Absolutely zero bounce. This thing, the offering just, it killed it. Absolutely killed it. Longs trapped. Awful. Healthier Life, I agree with you on the level 3. I haven't heard of level 3. That's probably got some pretty good market depth to it, though. Level 3. Bad. Just bought some FMT. I mean, I don't know. With the dilution there, that's going to be a tough one. That's going to be a tough one with that dilution on it. 240 million. You know, when it only had like 5 million in this flow, it's going to be a tough one to recover. But guys, yeah, that was today was pretty rough. I mean, I tried very difficult. It's that proper grammar. I tried very hard. Push the accelerator today when it wasn't the day to do it. So, God, was up pretty good on the day, down red, but it is what it is. We'll take it. I'm not going to be upset for trying because we're green on the week. I had a pretty solid green week, up a couple $100. Had a few good green days. Maximizing the green days, minimizing the red days. So I put the max loss on the account for a reason for that. Because when I go on tilt, it is I learned a couple days there. It can be bad. When my emotions get heightened, it doesn't matter if you have more years of experience. Like, if your emotions get heightened, guys, you can do some irrational things and get pretty tilted. So put the max loss on the account. I'll take that, max days there will be $50, and then, I had a $150 green day, $100 green day, so the green days, bigger than the red days, we'll take it. That's the idea. FMTO doesn't make Bond look so bad. 249 extra trillion shares found under the rug. And Bad bought one of them. Yeah, that was not fun. I've made a mental note not to do that again. I mean, dude, when I saw that thing down from $8 to 30 cents, I was like, I have got to start something here. We're going to see some kind of bounce off of shorts covering their positions on this, right? Nope. Nope, we did not. In fact, I don't think we saw shorts covering it. We hadn't seen any buying or shorts covering at all. That thing just down to 3 cents. And Time Fades was in. Are you in here, Time Fades? He traded like $1,600 worth of commissions on FMTO. Scalping. The ECN commissions when you're hyper scalping like 25,000 shares. They'll add up. They'll add up quick. So you got to be mindful of that. Hyper scalping. Oh, Kayvon, you're like an hour and a half late, dude. I'm about worn out. I've given my all to this chat. Should I start over for Kayvon? You got to go back and watch it. Given a lot of good stuff in this chat, man, since 9 o'clock. This chat's been... You guys are... I mean, for a Friday night, you guys hanging out with the green team. This is the green team. Look, I got to create some, like, green team apparel because this is the green squad. You guys... We're green we're green over the sum, for sure. You guys are killing it. Disciplined, focused, and confident. But the green team prevails in here. Kayvon was done scrolling. Why were you scrolling, dude? You saw my video pop up on your feed. You should have just clicked on it. He's not loyal. Not loyal enough, guys. I don't know what he was clicking on. Clicking on a bunch of random videos of girls twerking and whatnot when you could have been learning about how to day trade. I mean, I know you've only been doing this for like 10 years. Come on, man. This is where we learn. Bad, I don't have a Discord. I don't know. Maybe we'll get to it. We'll do whatever is going to be in popular demand. So if that's something that's of importance to you guys, we'll do it. We'll do it. Kayvon, so let me know what I know you wanted to test this out. What's the delay for you, Kayvon? I'm at 10, 20, 09, 10, 11, 12. What are we at? I don't know what 20 means. 20, but you're close. I don't know what you're referring to. Whatever. On your phone. On your phone, laying there in bed. Say hi to the wife for me. 20 years, dude. Holy crap, dude. You've been married longer to the stock market than you have your wife. Is she listening right now? Let's get her in here. 20 years. Wow. You have seen it all. Seen it all, Kayvon. 20 years. She's passed out. Wake her ass up. How old are you, Kayvon? To have been, okay, 20 years. You probably, I mean, your mom didn't have you looking at charts as a newborn, did she? You're not 20, are you? I'm a guess 36 or 7. How was that cognac earlier? Looked good. Yeah, we've had a good time in here. You'll have to go back and watch it. Watch the live stream. We'll try to do this most Friday nights. I ain't got nothing better to do. I mean, I do. Don't tell my wife that. I shouldn't say that too loud. What, honey? No, I'm going to get off soon because I miss you. I love you. Shh. Don't tell her. Had my friend open a joint account because he was 18. 37. Okay, I nailed it. Right there. I said that, didn't I? 37. First trades at around 15. All right. So you've had Scott trade. Yeah. All right, that makes sense. So you've had I mean, your whole life you've dedicated to the stock market, man. You don't have a choice but to make it here. You've dedicated your whole life to it. It's tough, man. I mean, I've considered it. The last 10 years you've been taking it serious. All right, so Kayvon, what piece of you're not taking any Plan B? What piece of advice would you give to the newer guys? So some of a lot of the guys in here, they didn't get started at 15, unfortunately. Even this morning, somebody mentioned, I don't remember who it was, but they just said they wish they would have started younger. This is way too much fun, and I don't know. I want to take a moment to just reflect on and being grateful for getting started, around 20, because I got started when I was in college, and it was the perfect time, really. I mean, it's so difficult to get started in this later in life, right? Because you just have so many additional responsibilities. It's so impossible, nearly. I mean, it really is. Once you have kids and spouse and jobs, and it's just, you have so many uphill battles. Because really, the most important thing is just time, experience. Experience is your best teacher. So you need experience. It's going to be your best teacher. You guys can listen to me all you want. I've said I can create the blueprint for you, but you got to build the house. So I mean that. I mean, I can really help jumpstart your trading career, but it's the experience is going to be your best teacher. Advice is hard. Everybody's different. Yeah, I get that. Everybody's different. Everybody has different trading philosophies. But there is certainly advice that can be applicable to the sum of traders. Keith, I've been trading a year and 3 months. Wish I would have started earlier, but that was expensive in and outs back then. Yeah, it was. It was very. So a lot of the offshore brokers, even like 10 years ago, well, some of them don't even exist. Like, I think I remember, what was it, Kayvon? It was like, there was SureTrader that definitely isn't around anymore. But a lot of them offshore tried to circumnavigate the PDT rule that all the U.S. guys, all of us had to deal with. And it was T+3 back then. T+3. So that's trading on a cash account. That means trading day plus 3 days. That's what I was dealing with, guys, 10 years ago on Thinkorswim. That's why I can't get off of Thinkorswim. I've been using it for 10 years. How could I? I mean, it's like, it's home. It's home to me. So I use it for charting and scanners. But T+3 means if I trade on a cash account on Monday, those funds don't settle until Thursday for me to trade with again. That sucked. Especially if you love trading like I did and like I do. That's really brutal. And now it's just T+1, and they settle the next day. So if you have a $5,000 cash account in the U.S. at wherever, Thinkorswim, you're gonna get that balance back the next day. But yeah, back then it was there were a lot, and I'm sure in 10 years you guys are gonna say, "Oh my God, like 10 years ago I was on T+1. Now y'all are on like T+2, T+1 minute." With how advanced technology is getting, I mean, why can't your funds settle nearly instantly? So once you fully close that position, maybe in another 10 years you guys will settle that cash immediately. So back in my day, yeah, we all can say that as far as something goes. But yeah, $20 round trip back then, yikes. I much prefer the 5 mils a share or so, 1,000 shares, 50 cents. A lot better at C-Pro. So I mean, I've paid a lot, $400 or $500 probably in fees and commissions, ECN, admin, locates, platform, and all that. But I'm gonna start sizing up a bit. We're gonna get rolling here soon. Bob, it's definitely harder starting anything new in life. Yeah, absolutely. Yeah. And Kayvon, we can next Friday, potentially, Mr. Kayvon might be on the mic with his 20 years of experience and the advice that he's reluctant to share, but he will share next Friday. You will not want to miss it. Next Friday, the stock market is closed. Maybe for Easter, Good Friday. Yeah, Good Friday. Buy low, sell high. Have a good night, guys. Yeah, that's we'll try to expound upon it next Friday. I'll come up with a list of questions. We'll pull it out of you. I know you got some deep thoughts going on over there. But yeah, the first hour of this was great. Thereafter has been just kind of chilling and hanging out with you guys. Which has been great as well, by the way. Anytime hanging with the fellas with the green team is a good time. Keith, the old man, 41, he's kicking it. He's hitting his bowl and calling it a night. Keith, we'll see you Monday morning. Well, I hope you feel better. Let's get that account going, and we'll get you on the green train. Okay, Vaughn, you gotta turn on the notifications, man. Wish you knew I went live. I was thinking about texting you, but I figured you had those on, so you would have known anyways. Mr. Bob, watching you Lakers, thanks for the enjoyable time. Yep, hope you guys are learning something. You guys are going to be good to go. You gotta, as long as you do as I say, not as I do, you guys will be good. You guys will be good. Bob, your thing right now, and I'm not trying to put salt in your wound right now. Your main thing, you gotta not marry anything. You gotta not marry any Tigger. Focus risk before you get into something. Look at the risk and look at the favorable risk and reward ratios. All right. So make sure the risk reward ratios are good before you get into anything. And embrace the risk, accept the results. Man, I don't know. This is... Like I told you guys, I've been a part of pretty much every chat room out there. Been in some rooms. I just admired... some of the traders that have been trading for a long time, and they instilled some valuable lessons into me that I hope to pass on to you guys. That's all. But guys, yep, Keith, Bob, Kevon, everybody, have a good night. Friday night party for the old people. Oh, this is too fun. We'll keep it up. And we'll probably do it next Friday, because next Friday the market's closed anyways. So why wouldn't we? I mean, what else are we going to do? We ain't going to the club. What else are we going to do? We'll hang out together. Get your drinks ready for next Friday, guys. Going to hang out, drink some bourbon, and we'll talk some stocks. But thank you, guys. I love you guys. I'm trying my best for you. We're going to make sure you're part of the green team, and we'll see you then.